Well, hello, Maverick traders. Welcome out to your market roundup for August 2nd. Corey here with you. Make sure that you follow your trading plan, and let's get to it. Plenty going on in the market still. It's been a volatile 2022. Historically speaking, summer months are a little more quiet. That is not the case this year. The market, the recovery, the bounce back, whatever you want to call this, has continued. We bounced right where we should have bounced. You'll see that as we come into these market charts where they bounced off of the 50-day moving average. Today was a little bit more of a consolidation. Most of the markets down slightly. Oil up just a touch, gold down, for example, but nothing really. It was kind of a digestion day, just, hey, a pause before we kind of make the next move. If we come in and look at advanced decline line, you'll see the same thing. About 50% decliners, 40% advancers. The 50-day moving average has swung in the favor of the bulls, with about 2/3 of all stocks now trending higher and above their 50-period moving average. On the daily news, tensions have ratcheted up in China, Taiwan. Speaker Pelosi traveling to Taiwan. China went ahead and started shooting off rockets, a la, reminiscent of North Korea and things of that nature. So there's some happenings there, and there's a little bit of nervousness in the markets that something could take a turn for the worst. And then the Fed members, this time it was daily, but others came out, Kashkari over the weekend and so on, saying, look, our work is far from done. If you think that we're done moving rates, if we're done fighting inflation, that's just not the case. So a lot of Fed speakers continuing to push that commentary that, hey, we're going to be raising rates, be prepared for it, and so on. And yet the markets continue to push higher. So how is this possible? Well, really, it comes back to what's known and what's unknown. And all of the bad, all of the things, inflation, higher rates, China, Taiwan, Russia, Ukraine, all of these things to a certain extent have been known for months. So they were able to be priced into the markets, and that's what this downtrend was doing. And the pessimism and the nervousness and so on kind of got overdone. And so you swing back in the other direction, right? It's kind of things got overdone on this side. They swing back and kind of go a little too far on this way because the pain trade switched. It was people holding out and bullish as the markets just continued to charge to the downside, and people getting run over, and the markets will find breaking points. And once people have kind of thrown in the towel and said, enough is enough, I can't take the pain anymore, well, now we've flipped, and now they're kind of inflicting pain this way. And we touched on this. I've been a buyer of the markets the past month or so, throughout this rally. We talked about it right back here, that this was a key point. You found yourself in one of two camps. Either you thought we were going to go blasting to new lows, or you expected that we were going to work our way higher for a while. And I was in that camp, the second camp, which is that we're going to work our way out of that we're going to have a corrective pattern. Now, did I know exactly how it would look? No, of course not. But I had a good sense that we would at least have some form of correction, not unlike this one, right? A corrective phase. Now, this one is more substantial than the past correction back there, in that it's lasted longer, it's had more chances to break down. That one was just kind of a violent move to the upside, and then it came off. This one, they've tried to hit it, and there's buyers on the dips. So a little bit of a turning point. But where do we go from here? Looking at the NASDAQ and looking at the S&P, there's not a whole lot of difference. We bounced at the 50 period. We're getting 20-50 bullish crossovers, and we're making new highs and higher lows, right? Each of these highs is going higher. The lows are going higher, and the next pullback will probably be attempted to be bought. So the question is, can this last long term? Are we just going to march our way back up? I suspect there's a little bit more in this, but that it's not really the type of recovery that's going to take us to new highs. My best guess is that we're going to start to stall out here. And I really, on Thursday and Friday, put on a couple of bearish trades in the market. I had a bullish position in the markets like S&P type of products, SPX index options or trading SPY, I had bullish positions for a few weeks and a couple of months here. And I did flip that. I took profits on Thursday on the bullish trades. And that was a day too early in hindsight, but I took some money off there. And then I initiated some bearish trades on Friday, which is basically flat. It hasn't done anything. It's not up, it's not down, it's just sideways. And these are not short term. These are a little bit longer term, but I want to be positioned for another leg down. And I think it'll take a few months before that happens. But that's my base case. That's kind of how I see this playing out. Big picture is we've made a nice correction. There's probably a little bit more upside to it. Should stall out and we'll start to push to the downside. As we look at the heat map, mixed bag. You know, you'd expect that in a sideways market environment like this one, where there's just almost an equal number of buys and sells, bullish and bearish list. There are a couple, like if you look at oil refining, there's a little bit more bright green. Or if you look over here at financials, Visa was in the news for the wrong reasons. Some debate as to whether or not they have control over some things that are pretty damning, you know, not great for their business and certainly not great for their reputation. So as we look at the weekly outlook, we've got 0 outlooks on the weekly and the monthly, but you can see the bullish turn. So the problem for me is that, you know, the charts are turning bullish, right? 20 crossing above the 50 and you're above both of those moving averages. So just grading it technically, you'd basically say, well, we're in a bullish upturn. We're starting to turn bullish. But my thought is that this is more of a big trading range, that we're going to, you know, when this is all said and done, you're going to see maybe a big triangle pattern or some sort of sideways move before we get any, you know, anything too substantial. And like I said, I actually think that we'll probably leave on the downside, not on the upside, more on the downside. So I don't really trust this as being the new bull market that's going to take off and run higher for years, but we'll see. We'll get more information as the market works its way forward. So looking at a few charts, we've got some bulls, some one neutral idea, and some bearish ideas. So let's take a closer look at them. We're going to start with EQT. We touched on this one last week and said we really want this to be a buy on the dip. So wait for the pullback, wait for the dip. I think today's a pretty good day to kind of look at that. This is a leader, the largest natural gas producer actually, and pulled back to the 50-day. Energy's been strong of late and has pulled back the last couple of days. So you can see how nicely it's gone higher over the past month. A minor pullback, and I suspect it's going to continue to have more bullish than bearish price action in the coming weeks. Rivian, we highlighted this one last week and said if you wanted the lower risk, kind of lower beta trade, you could do Ford, which had a similar setup. Well, Ford has actually had more volatility. Ford has skyrocketed. Rivian's done really well also, from 31 or so, 32 per share up to 35. I suspect, again, a little bit more push, but we were only thinking of this as a very short-term trade. So not anything that we would be playing long-term, you know, even for probably the next month or something. It would just be another pop here, another couple of points to the upside, and you'd take your profits. XBI we also have on the bullish list, and this is biotech. It's an ETF. You can see the bullish engulfing formation today. And the way I think that this kind of plays out, you can see the level that it broke out of previously, and I suspect that that should be kind of the bottom end of this range. It's bounced there a couple of times. Here's the top of the range, so you can kind of play it up to 85, and then I think we'll even break through and hit towards 90 over the next couple of weeks. So if this level doesn't hold, you can kind of forget about it, but right here, I think we can play this for a bounce. On the neutral side, we had been highlighting Intel, which went neutral, and we mentioned last week that time to take that off prior to earnings. And that stock got hit on earnings. We said the same thing about Amazon. If you had played that neutral from a highlight a few weeks prior, take that off before earnings, and that one skyrocketed. So they both moved sharply. Both moved bigger than was priced into the options on their earnings, which means it was the right call to take them off pre-earnings. Had the earnings been a dud and the stock's done nothing, well, then you'd have wished you'd have left them on. But Simon Property Group, I think this one is a neutral. Huge bearish engulfing, but you have some moving averages that are starting to turn upward. And my guess is that this is going to be in a choppy trading range. So it's not just going to stagnate, but any more down, and it'll kind of bounce up, but not have a lot of upside either. I think we could fast forward a few weeks, and this should be still in this 105, call it 100 to 110 range, that sort of idea, where it's not really making a lot of progress either direction. Garmin I like on the bearish side, and I found the bearish side a little bit more easy to feel comfortable with right here, right now. Garmin, a little bit of an inverse cup and handle, and I think we'll go down and through that level of support in Garmin. Rio also looks nice on the bear side. You've kind of come back up to a prior breakdown zone and starting to roll over, starting to fail there. I think we can press back down towards the prior lows. This chart, you'll see a lot of gaps, and that's because it's an ADR, American Depository Receipt, an international company that trades on U.S. exchanges through its ADR, and that will create a lot of gappiness, so be aware of that. And then last but not least is Vmware. Now, this doesn't look like a super bearish chart. This company has agreed to be bought out by Broadcom, and there's some math that goes into the buyout price, and it's part stock and part cash. So if Broadcom stock goes up a lot, VMware goes up. If Broadcom goes down a lot, VMware goes down. And if this deal were to fall apart, VMware would go down. I think there's multiple reasons to think that that's a real possibility. So this is a special situation. This is not really as much technical as it is just trading an excellent risk to reward. One of the best trades I've done this year, maybe the best, for how much it made in a short period of time. We spotted in Twitter, and we talked about this with Elon Musk, there was an opportunity to buy these downside out of the money put spreads and pay less than $1 for $5 spread. So you had this huge payoff with very little risk. And I bought a bunch of those. We highlighted that in the market roundups that I do on Tuesdays. And sure enough, a week or so later, rumblings that the deal was going to fall apart, and that stock just tanked and cratered. And then later on, the deal did fall apart and it fell down again. It didn't even take the official announcement, just the market's realization. And this is, usually deals go through. This one I feel like has a little bit more risk to it falling apart. So you can do some interesting things. I mean, you could buy 110, 100 put spreads and pay $1 something for a $10 spread. You don't want to buy them mega short term. Like, you don't want to trade a 1 week or a 2 week. I'm talking probably going out a few months on your spread, because you'll need time for this deal to fall apart and for the stock to trade all the way down to 100 or lower. And who knows if and when that announcement will happen. There's still quite a ways to go, but I think that the trade-off, not that the deal is likely to fall through, it might be 50-50, 60-40, but it's the risk to reward. Risking $1.50 that has an $8.50 payoff or something like that is very intriguing for this type of situation, because if it's announced that the deal falls apart, this stock could be trading in the 90s within a flash, within the very next trading day. So it is kind of an interesting opportunity, and those options are priced pretty well. Now, a word of caution. The bid-ask spreads are really wide. So you need to be very careful. Use limit orders and make sure that you try to get midpoint or better. I would start at even better than the midpoints. you're dealing with a less than ideal liquidity situation. So if you're buying a spread, if you're buying a single option, you got to work your order with limit prices that get you an excellent execution. Do not accept market prices. Don't chase the price. Don't do those sorts of things. Make sure you get a great price that presents an excellent risk to reward. Markets are likely in a bit of a trading range in my view. And I'll reiterate what we said last week, which is when you have a little bit of a sustained move up or down, you probably want to fade that, is my viewpoint. So here's why I said I think the bearish trades are a little bit easier to take. We've kind of had this sustained pop to the upside. I think we fade that off. I suspect there will be some selling coming in the not too distant future. We get ISM PMIs this week, and then on Friday, non-farm payrolls. Of course, the Fed always pays close attention to payrolls because that and price stability or inflation are their two main mandates. Earnings reports, we still have a lot of companies reporting this week. Alibaba reports, ConocoPhillips and DraftKings and Occidental and Moderna and PayPal and so on and so forth. And then over the weekend, Berkshire Hathaway comes out with their earnings reports. So plenty to keep us busy. Hope you've enjoyed it. Have a great rest of your week, and we will see you next time. Goodbye, everyone.